The United Kingdom's recent shift towards strengthening ties with China marks a pragmatic approach to global power dynamics, even as it diverges from the strategies of its traditional Western allies, such as the United States and the European Union. This shift, characterized by high-level political exchanges and structured financial dialogues, reflects the UK's recognition of China's growing global influence. In November 2024, during the G20 Summit in Rio de Janeiro, UK Prime Minister Sir Keir Starmer and Chinese President Xi Jinping held the first in-person meeting between the two nations' leaders since 2018. This meeting highlighted the importance of a strong UK-China relationship, focusing on key areas of cooperation including trade, investment, clean energy, financial services, and healthcare. Both leaders committed to maintaining regular and respectful communication to foster mutual trust and avoid surprises. Building on this engagement, plans were made to resume the UK-China economic and financial dialogue, which had been dormant since 2019. Chancellor Rachel Reeves is scheduled to visit Beijing in January 2025 to co-chair this dialogue with Chinese Vice Premier He Liang. The platform aims to address critical aspects of economic cooperation, including trade disputes, investment regulations, and collaborative projects in vital sectors. While the dialogue promotes economic growth and strategic cooperation, it has attracted criticism from those concerned about potential risks to national security and economic sovereignty. These developments signal a notable shift in UK foreign policy. While the United States and the EU have taken a more confrontational stance toward China, imposing sanctions and trade restrictions, the UK is focusing on enhancing its trade and diplomatic ties with Beijing. This approach reflects the UK's understanding of China's emergence as a global leader and the opportunities it presents for economic growth and innovation. However, the UK's deepening relations with China also come with challenges. It risks straining its traditional Western alliances, with leaders like former US President Donald Trump and EU policymakers potentially viewing this engagement with skepticism. Critics also emphasize the need for caution, urging the UK to safeguard its national interests in the face of China's growing influence. Nevertheless, the UK appears determined to balance its historical Western ties with a forward-thinking strategy that embraces China's role in shaping the future global order. This delicate balance could redefine the UK's international position, challenging traditional Western solidarity while seizing new opportunities in an increasingly multipolar world. In this video, we explore the growing relationship between China and the UK and assess its impact on both local and global economies. The UK-China relationship, a historical overview. The relationship between the United Kingdom and China has evolved significantly over the centuries, marked by periods of both collaboration and contention. The first contacts between Britain and China date back to the early 17th century, primarily driven by trade interests. The British East India Company sought to establish commercial relations, leading to the exchange of goods such as tea, silk, and porcelain. However, differing trade practices and diplomatic misunderstandings often led to tensions. In the 19th century, these tensions culminated in the Opium Wars, 1839 to 1842 and 1856 to 1860, which were sparked by Britain's export of opium to China and China's subsequent crackdown on the trade. The conflicts ended with the Treaty of Nanking in 1842, which ceded Hong Kong to Britain and marked the beginning of the era of unequal treaties, significantly impacting China's sovereignty and its relations with Western powers. The early 20th century continued to see complex interactions, including British involvement in suppressing the Boxer Rebellion, 1899 to 1901, and navigating the geopolitical shifts following the fall of the Qing dynasty in 1912. During World War II, Britain and China allied against Japanese aggression, fostering a sense of camaraderie. Post-war relations were complicated by the Chinese Civil War and the establishment of the People's Republic of China in 1949. The UK recognized the PRC in 1950, becoming one of the first Western nations to do so, though full diplomatic relations were only established in 1972. The status of Hong Kong remained a significant issue, eventually leading to the Sino-British Joint Declaration in 1984, which outlined the terms for Hong Kong's return to Chinese sovereignty in 1997 under the One Country, Two Systems principle. Modern UK-China relations, a golden era. The early 21st century saw a strengthening of UK-China relations, often referred to as a golden era, with increased high-level state visits, trade and educational exchanges. However, concerns over human rights issues, particularly in Hong Kong and Xinjiang, as well as security issues related to Chinese investments in critical infrastructure, have led to a reassessment of bilateral ties in recent years. The UK's approach has been one of cautious engagement, balancing economic opportunities with national security considerations. A notable example of this nuanced stance is the UK's decision to initially allow and later restrict Huawei's involvement in its 5G network. Additionally, the UK's response to China's actions in Hong Kong, including offering a pathway to citizenship for Hong Kong residents, has influenced relations. China now accounts for approximately 8% of the UK's total trade. The bilateral trade relationship spans various industries, including automotive, technology, and consumer goods. For example, the UK's export of luxury goods like Jaguar Land Rover to China has surged, driven by high demand in affluent urban centers like Shanghai and Beijing. Similarly, Chinese imports of British agricultural products, such as whiskey, have grown steadily, demonstrating the diversity of trade sectors. The impact of Brexit on trade dynamics. The UK's departure from the European Union has had a significant impact on its trade dynamics, particularly with neighboring European countries. The introduction of new trade barriers and regulatory divergences has increased costs and complexities for UK businesses exporting to the EU. This shift has been especially challenging for small and medium-sized enterprises, which often lack the resources to navigate the additional bureaucracy. In response, the UK has pursued trade agreements with non-EU countries to diversify its trade partnerships. Notably, the UK has joined the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, becoming the first European nation to do so. This agreement, which includes countries such as Japan, Canada, and Australia, aims to enhance trade by reducing tariffs and fostering economic cooperation across the Asia-Pacific region. Despite these efforts, trade deals with countries like the United States and various Commonwealth nations have not yet matched the volume or ease of trade that existed with the EU. While the UK has secured agreements with Australia and New Zealand, these are expected to bring only modest increases in trade over the coming years. In light of these challenges, the UK is actively exploring opportunities to deepen trade relationships with major global economies, including China. With its substantial industrial capacity and vast consumer market, China presents a potential avenue for the UK to address trade deficits arising from reduced EU commerce. However, deepening engagement with China requires careful navigation of complex geopolitical issues and ensuring that trade policies align with broader foreign policy and security goals. China has made significant investments in the UK's infrastructure, notably in projects like the Hinkley Point C nuclear power station. Located in Somerset, England, this project is a collaboration between EDF Energy and China General Nuclear Power Group, CGN, with CGN holding a 33.5% stake, contributing around $6 billion to its development. The construction of Hinkley Point C, which is projected to cost between $31 billion and $35 billion 2015 prices, is set for completion around 2030. This massive project is expected to create up to 25,000 jobs during the construction phase, providing a major boost to both the local and national economies. Beyond Hinkley Point C, Chinese investments have expanded into other key infrastructure sectors in the UK. For instance, the China Investment Corporation owns a 10% stake in Heathrow Airport, valued at £1.65 billion, and a 9% share in Thames Water, worth £1.2 billion. These investments have played a crucial role in modernizing the UK's infrastructure, supporting the development of essential services, and creating jobs. However, they also raise concerns over national security and economic sovereignty, particularly regarding foreign involvement in critical infrastructure. The UK government has implemented safeguards to ensure that these investments align with national interests and protect the integrity of vital services. Chinese investment in UK startups, particularly in the fintech and biotech sectors, has been growing. These investments provide British companies with valuable capital and collaboration opportunities, fostering innovation and market expansion. In December 2024, Fuel Ventures, a leading UK venture capital firm, secured a £20 million investment from major Chinese funds such as Shurengshen Industrial Fund and Zhongguancon Development Group. This partnership seeks to bridge Western and Eastern startup ecosystems, focusing on sectors like fintech, artificial intelligence, and software as a service, SaaS. In early 2024, a London-based fintech company specializing in open banking solutions, Abound, received a substantial $500 million investment from GSR Ventures, a Chinese venture capital firm, along with other equity investors. This investment underscores the growing interest of Chinese investors in the UK's fintech sector. Similarly, Cocoon Networks, a Chinese technology and investment group, launched a £500 million London-based venture capital fund in 2016, focusing on UK and European tech startups, particularly in biotech, fintech, medical devices, and creative tech. The fund aims to support companies with growth potential in the Chinese market, encouraging cross-border collaboration. In September 2024, AstraZeneca made headlines with its acquisition of Gracell Biotechnologies, a Shanghai-based biotech firm, for up to $1.2 billion. This marked the first instance of a foreign multinational acquiring a Chinese life sciences company. The deal enhances AstraZeneca's cell therapy pipeline and highlights the increasing collaboration between UK and Chinese biotech sectors. These investments not only provide UK startups with crucial funding, but also create opportunities for international collaboration, enabling access to new markets and the exchange of innovative ideas. The influx of Chinese capital into the UK's fintech and biotech industries demonstrates a shared interest in technological advancement and economic growth, strengthening the ties between the two nations' tech ecosystems. High-level political engagements and structured financial dialogues are playing an important role in advancing UK-China relations. In November 2024, during the G20 Summit in Rio de Janeiro, UK Prime Minister Sir Keir Starmer met with Chinese President Xi Jinping. This marked the first in-person meeting between UK and Chinese leaders since 2018. Both leaders emphasized the importance of a strong UK-China relationship and discussed enhancing cooperation in areas such as trade, investment, clean energy, financial services, and healthcare. They agreed on the need for consistent and respectful relations, aiming to maintain open communication channels and avoid surprises. Following this meeting, plans were made to resume the UK-China Economic and Financial Dialogue, EFD, which had been on hiatus since 2019. Chancellor Rachel Reeves is scheduled to visit Beijing in mid-January 2025 to co-chair the EFD with Chinese Vice Premier He Lifeng. The dialogue will address key aspects of economic cooperation, including trade disputes, investment regulations, and collaborative projects in sectors like financial services and clean energy. This initiative reflects the UK's strategic commitment to strengthening economic ties with China, balancing economic interests with national security considerations. The resumption of the EFD is seen as a crucial step in deepening bilateral relations, providing a formal platform for both nations to advance mutual interests. The UK and China are working to foster constructive dialogue and promote mutual economic growth. However, this approach has faced criticism, with some expressing concerns about potential risks to national security and economic sovereignty. Critics argue for a more cautious engagement with China, emphasizing the need to protect the UK's interests while pursuing economic cooperation. In January 2025, Chancellor Rachel Reeves will visit China, marking a significant step in strengthening UK-China financial relations. She will be accompanied by leading banking executives, including HSBC Chairman Mark Tucker. The delegation aims to explore collaborative opportunities across various financial sectors. A key focus of the visit will be discussing the potential for British companies to dual list on Chinese stock exchanges, which would enhance capital flow and investment opportunities between the two nations. This initiative builds on existing financial collaborations, such as the London-Shanghai Stock Connect, which facilitates cross-border investments. With China's advancements in digital payment systems like Alipay and WeChat Pay, the UK seeks to negotiate fintech partnerships to leverage these technologies, enhancing its digital payment infrastructure and fostering innovation in financial services. Despite the rise of financial centers in Asia, London maintains its status as a global financial hub. The city's deep capital markets, regulatory framework, and expertise continue to attract international business. Strengthening ties with China presents opportunities for joint ventures in several areas, with both nations demonstrating a commitment to sustainable development. Initiatives like the UK-China Green Finance Centre aim to accelerate the global transition to an environmentally sustainable future. London has also solidified its position as a prominent centre for offshore yuan trading, facilitating currency exchange and international trade. Enhanced cooperation with China could further strengthen this role and promote the internationalization of the Chinese yuan. Joint efforts in developing new financial instruments and platforms could drive efficiency and growth in both markets, benefiting from shared expertise and technological advancements. In education and academic research, the UK and China have built a strong partnership that fosters cultural exchange and drives innovation. Chinese students form the largest group of international learners in the UK, contributing significantly to the UK economy, with estimates suggesting they spend around $7 billion annually on tuition and living costs. This educational connection is complemented by expansive research collaboration, with China being the UK's second-largest partner in joint research projects. These efforts yield high-impact results, with citation metrics nearly 3 times the global average. Collaborative research spans crucial fields like personalized medicine and digital health, artificial intelligence, and renewable energy engineering. The presence of Chinese students in the UK also fosters mutual understanding, with these students often acting as informal ambassadors of their culture. However, the partnership is not without challenges. Chinese students in the UK face integration difficulties, including language barriers and social clustering, requiring educational institutions to address these issues. Geopolitical tensions and concerns about academic freedom also pose risks, requiring careful navigation to balance mutual benefits while safeguarding national interests. In financial services, the UK and China have significant opportunities for collaboration, especially in sustainable finance and currency globalization. Joint efforts in issuing green bonds could drive substantial investments in sustainable projects across both nations, supporting renewable energy and eco-friendly ventures. This partnership would not only support their domestic sustainability goals, but also set an example for international financial cooperation in combating climate change. London's position as a global financial hub also makes it a key player in the globalization of the Chinese yuan. By deepening its role in offshore yuan trading, London could enhance its financial influence and facilitate the broader adoption of the yuan in international markets. Increased trade in Chinese currency would benefit both countries by boosting bilateral trade and providing businesses with more efficient financial solutions. These opportunities for cooperation underscore the mutual benefits of aligning financial strategies to address global challenges and enhance economic integration, reflecting the broader potential for UK-China collaboration in the financial sector. Thank you for watching. We appreciate your support. If you enjoyed the video, please like it and subscribe to stay connected with our community. Your support means a lot to us. You can also watch another video on our channel now.